Welcome back to the deep dive. We are jumping straight into the heart of corporate strategy today,
That's right.
focusing exclusively on the CEO's opening remarks from the CoStarGroup Q3 2025 earnings.
Yeah, this isn't just, a financial report.
No, definitely not. It's a really detailed look at the high-stakes chess match they're playing.
In global real estate technology.
Exactly.
And our mission for you, the listener, is really to pull out those concrete financial metrics.
Okay.
Understand this massive pivot they're making toward AI.
Right.
And I think most importantly, dissect the competitive argument the CEO is making
Which is?
that their residential business model, Homes.com specifically, is just fundamentally better than the competition's.
So we're giving you the shortcut, understanding where the billions are going in this space.
Precisely. And why CoStar thinks they have the winning formula.
Okay, let's unpack this. Starting with the scorecard. Got to look at the financials first.
Absolutely. Before the strategy, you need the numbers. And they set some records.
What stood out?
Well, the word for the quarter, I think, is relentless. Q3 2025 revenue hit $834 million.
Wow.
That's a 20% jump year over year. But, the context is key here.
Which is this streak.
Exactly. Their 58th consecutive quarter of double-digit revenue growth.
58. Just let that sink in. That's nearly 15 years.
15 years, yeah, of consistent double-digit expansion.
In tech, that kind of streak. What does it tell us about their core business? It's not typical.
No, it really isn't. It tells you two things, I think. Durability and pricing power. It suggests they've got a significant moat, especially in commercial information. That data is critical for their clients.
Right, mission critical stuff.
And the profitability is accelerating, too.
Yeah.
Just at EBITDA jumped to $115 million.
And that was up how much?
A hefty 51% over Q3 2024. So growth and accelerating profit.
That acceleration is impressive. But future momentum often comes from new business, right? Bookings.
It certainly does. And they delivered there, too. Net new bookings were $84 million, which is a staggering 92% increase year over year.
92%. That really signals accelerating sales, doesn't it?
Absolutely. Across the board. Plus, they're running lean. The core commercial info and marketplace businesses hit a 47% profit margin this quarter.
47% margin. That's a strong foundation.
Very strong.
And that foundation is now really supporting their huge push into residential real estate.
Yeah, it's a major focus now.
This segment combines Apartments.com, Homes.com on the market in the UK, and now Domain in Australia.
It's basically an enterprise unto itself at this point.
Right, no longer a side project.
Not at all. If you assume they fully integrated Domain for the quarter, that combined residential portfolio has an annualized revenue run rate of $1.644 billion.
Over $1.6 billion. And growing fast.
Incredibly fast. Residential revenues grew 22.7% just quarter over quarter.
Wow.
And 31.3% year over year. The long-term goal, the CEO mentioned, is getting over 40% adjusted EBITDA margin for this whole segment combined.
Okay, ambitious. But we have to talk about the anchor there, Apartments.com. Still a powerhouse.
Oh, absolutely. It just passed a $1.2 billion annual run rate. It's a cash machine.
And the loyalty metrics are just crazy.
They really are. They boast a 99% monthly renewal rate. Think about that.
Almost zero churn.
And an incredibly high net promoter score, an NPS of 93.
For anyone listening, NPS measures customer recommendation likelihood. 93 is, well, it's almost unheard of.
It really is. In any industry. Signifies intense loyalty.
And they're investing in people, too.
Yeah, aggressively hiring, grew their sales team to over 500 reps. They actually hit their 2025 target ahead of schedule.
But the real buzz, the spotlight, seems to be shifting to Homes.com.
That's where the narrative is really focused now, yeah.
This is where it gets interesting. The CEO made this bold claim about Homes.com being historically fast growth. What was the evidence?
He basically said Homes.com generated 50% more incremental revenue in its first 7 quarters than Apartments.com did in its first 7 quarters.
50% more. That's hyper acceleration.
That's the term, yeah. And subscriptions are driving it. Over 26,000 subscribing agents now.
Yeah.
And the annualized net new bookings for those subscriptions up 53% just quarter over quarter.
53% Q over Q growth in new subscription bookings. That's huge momentum.
Massive.
Which brings us to the core strategic argument. Your listing, your lead. The CEO positions this as just fundamentally better than how competitors operate. Let's break that down. Why is the competitor model, the lead diversion model, seen as limiting?
Well, it boils down to basic economic alignment, or maybe misalignment.
How's the O?
If a portal makes money by selling leads from Jane Doe's listing to Agent Smith,
Right.
you're essentially taking business away from Jane Doe, the listing agent, to profit from Agent Smith.
So you're competing with the agent whose listing you're displaying.
Exactly. By definition, you're diverting potential clients from the vast majority of agents, the 95% who didn't pay you for that lead. That naturally limits your customer base to the few agents, maybe 5% the CEO claims, willing to pay for those diverted leads.
Okay, so the competitor pool is inherently small. And CoStar's claim with Homes.com is...
Because they guarantee the listing agent gets the lead.
Yeah.
Your listing, your lead. They aren't seen as a competitor.
They're a partner.
Right, a marketing partner.
Yeah.
So they believe they can approach well more than 50% of agents and sell them other marketing tools like Boost without that fundamental conflict.
And this alignment, is it showing up in listing exposure?
According to the CEO, yes.
Mm-hmm.
He noted Homes.com is now promoting 130,000 active listings. They estimate that about 6% of the U.S. market.
Compared to
an estimated 24,500 comparable listings, about 1.1% for a major competitor's similar premium product.
So a five-fold difference in the volume of promoted listings.
That's the claim. Big difference in exposure.
And they're not just selling to agents, they're monetizing homeowners, too.
Yes, with the Homes.com Boost product, sales of that jumped 136% quarter over quarter.
Wow.
And they estimate the total addressable market, the TAM, for Boost sold just to homeowners is around $2 billion.
$2 billion, that's a significant separate revenue stream.
Definitely. Built right on top of that listing exposure model.
Okay, let's pivot. The technology enabling this, AI. The CEO really hammered this point. AI isn't just a feature anymore.
No, it's central. He was very clear. 50%, half of Homes.com's software development effort is now directed specifically at building AI-powered features.
Half their dev team on AI, that's a massive commitment.
It's a huge reallocation of existing resources. It signals AI is the core of future user experience for them.
And the early results seem promising. He mentioned AI Smart Search.
Yeah, that seems to be validating the investment. Smart Search is all about reducing friction for the user.
How does it work?
Instead of clicking endless drop-downs and filters, you can just ask complex questions in plain English. Like, show me waterfront properties with a pool in Miami Beach and Fort Lauderdale starting at $1 million. You combine multiple complex criteria naturally.
That sounds much better than the old way.
The engagement numbers suggest it is. Users of Smart Search are apparently 5 times more likely to return to the site within the next week.
5 times more likely to come back. That's sticky.
Very. They also view 37% more listing pages per session and use 69% more search filters.
Meaning the AI helps them refine their search better.
Exactly. It's significantly deepening engagement, not just simplifying the start.
Engagement is also tied heavily to visuals, right? Which brings Matterport into play.
Definitely. The data here was pretty stark. Matterport listings, those with the 3D tours, captured nearly 40 times the detailed views compared to listings without them.
40 times.
40 times.
Yeah.
And for the agents, the subscribers using the feature, it directly led to a 37% higher renewal rate.
So the visual experience drives retention. Makes sense.
Absolutely. And they're pushing visual tech further, developing something called Gaussian splat.
Gaussian splat.
Yeah, for photorealistic 3D exterior views using drones. So pushing the envelope on visuals.
Okay. What about overall traffic? Did they share any competitive trends?
They did. Cited Comscore data. The Homes.com network hit 115 million unique monthly visitors.
Solid number.
But the comparison was key. Comscore apparently showed Homes.com unique visitors rose 8.3%,
Okay.
while a major competitor saw a 6.5% decline in the same period.
So Homes.com gaining, competitor declining, according to that data, capturing momentum.
That's the narrative, yes.
The CEO also talked about preparing for future traffic. Mentioned AEO and GEO. What's that about?
Right. AEO is answer engine optimization. GEO is generative engine optimization.
Okay. Optimizing for AI answers.
Essentially, yes. Think about how people might interact with AI search in the future. If someone asks a complex real estate question directly to an AI.
Like the smart search example, but directly to Google's AI or something.
Exactly. CoStar wants to be the source that provides the definitive data-rich answer right there in the AI response, capturing traffic at the very top of the funnel.
Even before they click to a website.
Potentially. He did note that GEO traffic is less than 1% of acquisition today, but preparing for that shift is clearly a major strategic focus for future relevance.
Interesting. Okay, moving on. The CEO spent quite a bit of time on what he called an uncomfortable but important matter.
Ah, yes, the legal landscape discussion.
Focused on a major competitor.
Yeah.
And just to be clear for everyone listening, we're simply reporting the context he provided regarding the alleged weaknesses of that competitor's model.
Precisely. We're neutral observers relaying the remarks. He described what he termed an unprecedented wave of lawsuits targeting Zillow.
How many?
He cited 5 separate federal lawsuits filed just since June 2025, alleging things from antitrust violations and copyright theft to consumer deception.
He mentioned specific cases.
He did. The Compass lawsuit alleging a Zillow ban against their agents.
Okay.
He also brought up CoStar's own long-running IP theft lawsuit against them, referencing the $2.5 billion damages CoStar won against Xceligent in a similar case, providing context, essentially.
Right, setting precedent.
Then there was the class action suit over the contact agent button. The allegation there is that it deceives buyers, sending them not to the listing agent, but to a paying buyer's agent instead.
The core of the lead diversion complaint again.
Exactly. And finally, he mentioned the FTC and several attorney generals suing over an alleged illegal agreement with Redfin about rental advertising.
So quite a list. It seems clear the CEO is using the public disclosure of these legal fights to draw a sharp contrast.
Between CoStar's partnership model and the competitor's alleged lead diversion strategy and its resulting challenges, yes.
Okay. Shifting gears globally now. Australia. The domain acquisition closed in August. Any early signs?
Yes, and seemingly positive ones. He said the brand hit its largest number of unique users ever, 7.4 million in September, right after the acquisition closed.
Immediate impact then. What's the strategy there? Just integrate it.
It sounds like focus and integration. He stated domain was previously, let's say, constrained. Its former owner apparently had resources tied up in about 10 non-core projects.
Diluting focus from the main portal business.
That was the implication. So the new strategy is to ditch those non-core initiatives and pour resources only into the core profitable portals.
Makes sense. Any specific plans for Australia?
Ambitious ones. They expect to launch LoopNet, Homes.com, and the main CoStar information platform in Australia within 18 months.
Aggressive timeline. And quick check on the UK, on the market.
Showing strong organic growth. Leads up 21% year over year. And net new bookings have increased for 17 straight months.
17 months. Consistent growth there, too. It all feeds the broader narrative.
It really does. And let's not forget the quiet backbone, commercial and enterprise.
Right, the original CoStar business.
CoStar itself, the commercial info platform, brought in $277 million in Q3 revenue. And its renewal rate hit 93.3%, the highest since 2023.
Very sticky.
And LoopNet, the commercial marketplace,
Saw 10% revenue growth. The CEO acknowledged that's lower than they'd like.
Okay.
But he expects it to get back to 20% plus annual growth soon. The key value prop data point he shared was interesting.
What was that?
Speed of transaction. Data shows properties listed on LoopNet simply transact faster.
How much faster?
For properties tracked since early 2024, 30% of those on LoopNet transacted versus only 22% of those not listed there. So an 8 percentage point difference. That's significant for a seller or broker. Roughly 80% higher probability with LoopNet investment.
It's a compelling argument for commercial clients, definitely.
Now, Matterport. They acquired it, and now it's being positioned as this dual pillar business.
Exactly, Pillar 1. Matterport as a standalone solution. Think insurance, construction, facilities management, big industries.
Okay.
Pillar 2, Matterport integrated within CoStar's own marketplaces. They believe that integration alone will add over $1 billion in incremental value eventually.
$1 billion just from integration synergy. And how's Matterport doing standalone?
Q3 revenue was $44 million, beat expectations, and net bookings were up a massive 194% year over year.
Huge bookings growth.
Yeah. They're planning to expand its dedicated sales force by 200 people by the end of 2026 to capture that demand.
Okay. Finally, let's touch on the emerging businesses. Sometimes get overlooked.
They definitely shouldn't be. 2 stood out in the remarks. First, CoStar Lender.
Right, for commercial loans.
It had a record quarter. It's now getting close to the $100 million revenue milestone.
Impressive.
But the scale is maybe more significant than the revenue right now. They have over $1 trillion of commercial loans uploaded onto the platform.
$1 trillion in loans. That's incredible data for risk analysis.
Makes it vital for banks, financial institutions doing due diligence, managing portfolio risk. Huge data asset.
What was the second emerging area?
CoStar Real Estate Manager and Visual Lease. Basically, lease management software.
Growing fast.
Explosively. Revenue climbed 63% year over year.
What's driving that?
Mostly regulatory compliance. New lease accounting standards are forcing companies, big and small, to digitize and standardize how they track leases.
A mandatory catalyst.
Precisely. And they plan to add lease benchmarking capabilities in mid-2026. That turns it from just a compliance tool into a business intelligence product using all that data.
Okay, so let's try and synthesize the CEO's core message from Q3 2025. What are the big takeaways?
I think there are three main strategic commitments shining through. One, the financial engine is incredibly strong and consistent.
58 3/4, yeah.
Shows no signs of slowing. Two, a massive all-in bet on AI. Dedicating half of Homes.com development to it. That's huge.
A clear strategic priority.
And three, aggressively positioning your listing, your lead residential model, not just as better business, but maybe even more ethical, and definitely the strategically superior future for that market.
Right, drawing that stark contrast.
And ultimately, the CEO wrapped all this up, the global moves, the tech investment, the residential pivot, as building this deep defensible moat.
Around what he sees as what was the number?
A potential $1 trillion addressable market in digitizing global real estate.
1 trillion. It's a huge interconnected vision. Okay, final thought then. We talked about AEO and GEO preparing for AI-driven search traffic. If specialized AI really does take over in verticals like real estate, and users get complex answers directly from conversational AI.
Instead of clicking links on a results page.
Right. How do companies monetize that traffic? If the value exchange happens within the AI conversation itself, what does that do to the traditional value of just basic brand recognition and website clicks?
That is, I think, the multi-billion, maybe trillion-dollar question facing every digital publisher and marketplace right now. How do you capture value in a world of smart answers, not just smart searches?
Definitely something for you, our listeners, to think about as this AI wave washes over everything. That's all the time we have for this deep dive.
We'll catch you next time.